I made over $1,000 this first week of me trading options. Now, I'm not an expert. I don't know everything about all this stuff. But again, I'm just documenting my journey. You guys can learn or do whatever you want to do from this. But I'm going to show you my strategies and what I did and what I learned from Monday to Friday and over that time. And things that helped me become successful in this, at least for the first week. And hopefully that I plan to implement each week here moving forward or for throughout the year or whatever it may be. So when it comes to options and trading, I again am not an expert at everything, so I can't break down all the nuances of it just yet. But what I am starting to learn is buying calls. So at least on that aspect, I have started to get an understanding of it. And the best thing I can say is I just got in by buying a single call on a Friday. It expired the same day, just a quick like day trade type thing, and learning from that call. So basically what I did was I was on my way to Philadelphia last week and I bought a call I guess 2 weeks ago, whatever it was. That was my first official options trade. I bought a call on Tesla and I was watching it move up and down and it was going so fast, yet it said like a couple percent, but it was crazy how drastic it was changing compared to the actual stock value. So that was one thing that I was like not really understanding like how this was working. And then I started to understand, okay, I see that within options you have a bigger chance of making a way bigger profit with a smaller move on the actual stock value, which is crazy on how that works. So when I started to see that, I was like, oh, I can have a 10, a 20, 100% gain on a call if I get the right call and hit the right numbers in a single day or 15 minutes or an hour or 1,000% gain or whatever it may be, compared to having that in stocks and holding those for the long haul and things like that. So as I started to see that, I had bought the Tesla call, and the next thing you know, I made like $100, and I had it for like 15 minutes. I was literally boarding the flight. As I got down to sit down at my seat, I looked at my phone and I was like, yo, I'm up like $100. So I just sold it and cashed out. And I was like, this is wild. Like I literally just did this in like 15 minutes. And you calculate all that up and you can make a lot of money in a single hour if you do it right. Then I started to look into it a little bit more over the weekend, and I got to Monday and I was like, you know what? I'm gonna start making some calls. On this first one right here, it shows a total profit of $814, and this one was the Apple one that I did. So I had bought Apple and I saw it was moving and I was like, okay, cool. I'm about to get in and see if I can, get a little jump, because I saw a big downfall on it and I was like, it's not just going to keep going down. As you know, stocks move up and down throughout the day, and I was like, this is where people make their money, through these little jumps, whether it's $1, $2, $3, $5, whatever it is for the stock. Those little jumps is where people will be making their money. So how long does it take for the next jump to get halfway or back to where it was at? And can I buy it at the bottom of that and try to catch that little wave in that run? So I don't know, again, if I'm explaining this right, but this is just like, I'm just recording my mindset and thought process through all this. So I had bought the call and then I saw it and I was like, oh, it's going up. But I was like, it's got more room to run. And I think if I hold it until tomorrow, even though it's for the whole week, because I got it expiring on that Friday, if I hold it till tomorrow, I think I can make more. Bro, went to sleep, woke up, it was up like 40, 50%, whatever it was. I don't even remember. Either way, it was up more. So I was up like a couple $100, and I was like, man, I could take this profit right now, get in, get out, be cool. But I was like, I want to see what it looks like if I hold it for a little bit longer. So I just did it for another day, held it, and it was up. As soon as I woke up, it was up. So I woke up and I just cashed out. Took like $700-800, whatever it was. From that point, I was like, okay, so there's ones that I can do this for the long haul. Like, how do I do this? So that's why I started looking at like those year-long contracts, because I saw people were doing year-long contracts. And I was like, what exactly does this mean? Basically, they're taking a stock and they're saying, like, for example, let's say a stock is at $150 and they're saying next year the stock is going to be $180 January from now. So 12 months from now. I guess we're in February now, but either way, let's say it's going to be $180 by that time. I think it's going to go up by $30. And then there's like these different options that you can buy, saying like what you think the price is going to be at. So basically by buying those, that's where you're at. So if you hit that target and you get basically all the money that you put into it for that contract is going to double and get to that point. And then when it goes past that, you kind of like make, I don't know if it's exponential money, but the percentages just go crazy and you get a really, really high return. And that's how you see those plays where people are like, oh, I bought a call and it went to, it was for 180, but then it went to 225 and I made $10,000. Or you see people do those hits and they're like posting on the internet, oh, I made 20, I made $30,000, stuff like that. Now I started to see how that was working. So I was like, okay, I got 2 calls. So let's go to the position. I have 4 positions right now for the longer play. So we'll go through those real quick and then I'll kind of get back to where I was at. So I saw that with the Apple Play and I was like, bro, I just made like $700 overnight. Like, this is crazy. What could I do if I bought it for the long haul? So the first one that I had got was the Nvidia, or actually no, this one was Nike. I didn't get Nike first, but I'll show you the Nvidia one first because this is the first one I had got. I got Nvidia, and my average cost on that one, I got 1 contract and it was $24.15. So the current price is $29.83, and the contract was what means 1 contract $24.15, which means it's gonna be $2,400 for the contract is what it had cost. But now the contract is this much and it's already moving up. I'm up 23%, so I'm up $568. So I could say I'm up, but this is a long play. This is for next year. So basically I'm saying, hey, I think that the stock is going to get to above 147 by January of 2026. So when it hits that point, I'm going to get all my bread back. And then when it goes past that point, that's when I'm going to start making a bag. So basically, I'm going to turn $2,400 into $5,000. And then from that point, it's just going to start growing like crazy. And that's where I'm going to be able to cash out. So right now, I put $2,400 in. And my goal and my expectation of this is to be at like $10,000 or something like that. I don't know. We'll see what it turns into a year from now. But this is one of the contracts that I'm in. And I think it's a really good play just based off of Nvidia and how it's moving. But that was one that I was like, this would be great for the long haul. So I'm rocking with this one. The next one was the Nike one. This one was just like me talking shit with my homie. And he was like, bro, Nike's about to run up this year. Because it's been down for like 3 or 4 years or whatever. I was like, you know what? Maybe this year is the year. There's a lot of hype around sneakers. They've been doing their thing. I saw a little bit of jumps on it. So I bought it. When I bought it, it was at 960. It just kept going down. That's where people buy puts. But I was like, you know what? I don't want to buy a put because that's kind of like hedging your bets. Kind of saying like, calls are like, I think the stock is going to go up. Puts are like, I think the stock is going to go down. And then selling is a different thing. But buying calls is saying the stock's going to go up. Buying puts is saying the stock is going to go down. Is what my interpretation is. So right now, there's a couple different options. I also found out I could buy this same contract again, but now for a cheaper price. So that'll average my price out and basically bring it down. So just like we dollar cost average with stocks, we could do the same thing here with the option plays as well. So if I want to buy this same option, I could go buy it, but it's going to be cheaper now for me to buy it on this same expiration date, which will help decrease my overall average cost, which means when it gets back up to that break even point, it'll get there faster now because for me to break even, because now I've decreased my average cost. But at the same time, I'm still gonna have to spend money to purchase that call. So for example, this call, 1 contract, let's say $960, 1 contract, so that's gonna be, or $9.60, that's gonna be about $960 because 1 contract is 100 shares essentially. So when you do that, you multiply it by that. So if you see if it's at 720, that means what? You see market value is $720. So if I wanted to buy another contract to kind of like even it out and get it around like the $8 mark or something like that, I'm going to have to put another $720 into that just to get it to there. So for this one in particular, I'm kind of just like chilling and letting it do its thing. I have a whole year to let it play out. I feel like it has to get back up to 960, like where's that at on the graph? 960, where we at? Like right here. Yeah, see, that's pretty high up here actually. I bought it a little higher. But it shows also with that, if you look on the graph, it was at $11. So even with that, I have confidence to say, hey, I think it can at least get back somewhere up there. 1170, just looking at 3 months, looking at a year right here, like even at one point it was at $21 in 2024, even though the stock was going down through the past 3 years. So that still tells me I could double or even more my money. So if I put 900 and some bucks in there, I could get back to breaking even, getting to that $87 is where the stock needs to be. It's at $69 now. Is that a big move? Yes, but at the same time, I think it can at least get back. So for this one, I'm kind of just like chilling, letting it do its thing. Now, SoFi is another one I have stocks in, and then also I wanted to buy a call on this one just to kind of test it out and see. It was pretty cheap, so I bought two this time, and I am down right now $194. And again, this is the long play, so I really am not tripping at all. And one thing that I've also learned is with these options, bro, you have to have extremely thick skin. I had bought the Apple Play, and that one I had bought more contracts. And when I did that, bro, you will literally go from like, you're like up $400, and then you look later and you're like down $300, and then you look later and it's like up 150, up 500, up 700, up 900, down 600, down 700, and it just like goes like this. So if you don't have like a stop loss saying like I'm willing to lose this much percentage, or like these are the gains I want and this is where I want to be, or saying like when it's down, can I swallow that in looking at that number and be confident that it's going to go back up to where I need it to go back up to, and be able to pull the trigger when it goes back up that next time and not get too greedy and try to make a little bit more and get to where that number where you want to be of profit. So like you can see on here on the graph, I did smaller contracts on other ones, but I made $177. I made $307. I made $406. So for those ones, those smaller contracts, I'm in, I'm out. I make a few $100, I'm in and I'm out. And next thing you know, at the end of the month, we're looking at $1,400, somewhere around there. So it's also not being greedy. Understand you got to have thick skin. You got to get in, you got to get out, you got to get your profits and go. And then obviously on these long plays, you have to understand you don't need to hold these until expiration dates. So say I'm like super up and the stock is just like hitting the all-time high and it's just booming. It's probably smart for me to sell and then wait for it to drop, because it has to have a pullback at some point, and then buy back in and then let it do its thing again. So that's kind of like my mindset and what I've learned over this past week. And then another thing too as well. So I have an NVIDIA play. This one is for what is this one for? Okay, so this one's for $12.15 was my average cost. The current value now is $15.40. So what I noticed too, when you buy these calls, they have different values in each call depending on like the expiration dates and things like that, and the call and what it is. So basically they don't all match up. So for example, you see I have an NVIDIA play right here, and it says $125 is my call. Now if I go back and I look at the other NVIDIA play, it says $123 is my call. And I bought this one before that one, and my price is different, $24.15. Oh wait, sorry, that was my average cost. My price on this one is $29.83 on the year-long play. And then on the, I guess, 3-month play, it's $15.40. So they all are different on each contract. So they don't all match up, which is something that I still kind of don't fully understand. I know it's based off of like an equation or something like that, but either way, you just want to buy the number at the right price for those options, and then make sure that you're getting it when it's going up, or catching it on the downfall, and then before it goes up, is what I'm learning. And all I know is I'm making money, so I got something right. But again, I'm gonna learn all the terms and like all this stuff and how it works out. But that's kind of like, I guess, the base gist of everything that's like on the top of my head of what goes on with this. Now, again, my goal for options when I first started last week was to make $1,000 a week, and I did that in the first week. So now the question is, can I do that every week? This is the week where I test myself to say, can I rinse and repeat that same process and do it again, and then again and again and again. The goal for this month of February is to make $4,000 in a month. So average out whether I make 800 this week and 1200 that week, whatever it may be, the goal is to make $4,000 in the month of February. And then next month, we'll reevaluate and see if I can do a $10,000 a month with these option trades throughout the week. And obviously the longer plays are going to take some more time, so I'm not going to count those, just the realized gains. Realized gains means basically the stuff that you actually end up selling and taking the profits from in that moment, in that time for the week. So that's kind of like my recap and everything. Oh yeah, and the reason why I decided to do Nvidia for a 125 call expiring in a few months is because their earnings call is at the end of this month. So I kind of wanted to play it a little bit farther out. And it says that break-even point is $137.50. The stock is currently at $129, and the stock has slowly been going down a little bit. I've seen the stock go above. If we go to Nvidia, if we look at Nvidia in general, the stock has been above $139 before. And typically we see people kind of like, I don't know if you want to call it like tanking the stock or whatever, but basically like even if I look at this, $153, right? That's way past the call that I have. So my thought is, if I buy one of these calls and I get one of these contracts, when they have their earnings call on the 26th, typically what happens is the stock starts to boom after that when they get their earnings and they overperform and everything like that. And we see that same kind of track record with certain stocks. So for this one in particular, I think the same thing is going to happen. And that allows me to have a better calculated risk, thinking that it's going to go down before, and then like a couple weeks before, it's going to start creeping up a little bit, and then they're going to have their earning call, and then it's going to pop off. And when it pops off, I'm going to get my bag. So my thought is for this one, even though I have almost 31 shares, and this one is doing good, it's up 36% and everything, but going back to the call, this makes so much sense because I'm thinking like, oh, it can go past $150. And if it goes past $150, now we're talking about cooking on this play, because this was a $1,250 play. It's already up $300 now, but I'm thinking like, oh yeah, I'm gonna get my $1,250 back, and then it's gonna boom. Next thing you know, we're gonna turn $1,250 into $5,000 or $6,000 or $7,000, depending on how it all calculates out. If anything, a few $1,000s on a play within a few weeks. So that could be another thing that happens soon within this month, which I think could also help me push past that goal. So I think it's like playing short plays and playing medium plays and playing longer plays all at the same time. That way you're kind of like just being more safe about it instead of trying to do like quick hits every single day. It's just obviously a lot more work, a lot more to pay attention to, a lot more to think about. But that's kind of where everything is currently at right now with me on the options. So again, if you guys have questions, try to drop them down below in the comment section. I don't know if I can answer everything, but I'll try to answer them, or if anything, make more videos answering the questions and just document my process. Again, this is not a financial advice or anything like that. I'm just showing my experiences and allowing you guys to follow the journey. So if you guys enjoyed this, make sure you guys hit that subscribe button. I'll try to make a video every single week. And oh yeah, we got free stocks and links down below for that in the description as well. I'll see you guys in another one. I'm out.